Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are into the week of 20th to 24th of March, and today the start of the week is 20th of March. I'm giving this Asian session live market analysis and the forecast webinar, explaining the expected market moves from Monday to Friday, and also the range in which the currencies are expected to swing during this week. Besides, I will also do the market reading for today to explain to you in which way the players intend to make the moves in the market. Then finally, I'll touch upon the trading strategy, which is vital in order to earn in any market condition. My contact details are given here. So if you want to contact me through email, dr@i-knowindices.com, or like to contact me through Skype chat, then iknowindices@hotmail.com is my chat ID, Skype chat ID. In the website, you can visit and find more information. i-knowindices.com. So in my trading system, normally I cover up the derived forecast. So in this, I will explain to you the session-wise forecast for all the 5 days of the week, besides the levels in which the currencies are expected to swing. So you come across the forecast, which is time-bound. So when you look into that of the time and try to understand which way the players are going to make the moves in the market, then you will find that we do not get that uncertainty. We know up to this particular time frame, they are going to make a specific move. Afterwards, they are going to change it. So that once you have taken the position, we will try to exit out of that before the start of the next session. So this way, we can see that we can slowly build our equity without becoming greedy when the position is making profit. We can always do small swing trades and build the equity. We can do position trade when the equity is big, and also we have got the patience to keep stop at entry and wait for the position to maximize the profit. But many of the traders, what they do, as soon as they take the position, when the position is making profit, immediately they think of position trade. And also when the position is making big loss, then they say that, just cheating themselves, that I'm doing position trade. Wait for the last making position to show profit, then I will book profit. I got abundant equity to hold. That is not the way in which we have to trade in the market. We have to see that whatever the position we take, the drawdown is less, so that it does not consume much of your free margin, so that you will not be disturbed. Once you don't get the market fear, then you make sensible decisions and earn money from the other market. So we have to first and foremost give importance to that of the elimination of market fear. In order to do it successfully, you need to have a reliable forecast. I am giving it free of cost here, just for you to understand how the forecast is guiding you to take appropriate positions and earn money from the other market. Besides, the market reading gives you the insight to understand how you can read the market and how you can just take appropriate positions, so that you'll be able to really focus on the trades rather than getting disturbed with regard to the data release or the fundamentals, etc. So ultimately, we need to know that we are able to earn money from the other market. We are not entering into the market just to become an expert advisor, but we wanted to become an expert trader. So keep that in mind and then try to focus on it. A good trader always limit the risk and maximize the profit. So he thinks of the trading strategy. And when the hedging facility is available in the trading platform, we have got innumerable possibilities of using the hedging to our advantage. And that is what I explained during that of the Tracking the Forex Market Together webinar. And you know that on Wednesday, last Wednesday, 15th, I gave the twin webinar and explained to you how exactly before that of the FOMC, the players are expected to make a small dip and then start gaining big in the case of Euro and GBP. And you would have seen that exactly they did the same. So when you get such spike trade opportunities and when you find that the forecast is reliable, then you can make use of such calls and try to take the positions and limit the risk using the hedge order and try to maximize the profit when they are making quick move during the spike trades. That way you will be able to build up your equity. So focus on it. Try to focus on the trades alone rather than getting distracted with regard to various type of analysis, various type of the market comments, etc. They are all of academic interest. But practically, if you want to earn money from the other market, you need to know the exact trading methodology and the trading strategy. Nobody explained to you what is the trading strategy you need to follow in the market. They simply say that the market could go up or come down and things like that, and try to say that here you can keep the stop and here you can take profit, etc. But in the event when the position makes loss, what are the measures you have to take? How you can convert a loss-making position into a profit-making position? That sort of thinking has not somehow come into the minds of the analyst. Now the forecast part of it. This is the third week of March. So still the trending move is expected to happen 20th to 24th of March. Swing and rise moves are expected in the market. Today is 20th. So all the three sessions are given here with the session timings. So you can follow the timings and try to take the position and exit out of the position within the session as a session-wise trade. If needed, when they are going to make a good rise, then you can try to take the position during that of the slide and book profit during that of the rise as the intraday trade. And if you are just trying to take the position during that of the week beginning false move or a slide, and then later on try to close it by end of the week, then it could be a weekly position trade. So you can keep stop at entry and allow the position to make profit, more and more profit, that you can capture it on Friday when there is a huge short covering coming. And last Friday you would have noticed that they have been making such moves in the market. GBP, they went up to that of 1.24 from 1.22 area, and Euro, they quickly rise to the level to 1.0775 and later on came down to 1.0725 area in order to mainly drop Euro GBP cross. They made the profit booking after gaining more levels in the case of Euro GBP. Before the weekend, they have booked the profit because Euro GBP cross, the weightage is more and holding of the position over the weekend, they may have to pay more margin. So that is why the players have just exited out of the Euro GBP cross position and they have just taken the position in the case of Euro and GBP. The majors. So tomorrow, they are expected to make the rise during that of the Japanese and the US session, and during that of the European session, they could make sideways move. Then day after tomorrow, again they are expected to make either way stop-ins in the market before shifting the trading zone. Normally they do that either way stop-in they could do, so that those who have taken the higher level long and lower levels short, they will be just trapped, or they will be induced to do the short covering and the long liquidation. So what you have to do is, whenever there is a quick drop, at that time you have to buy. Whenever there is a quick rise, you have to exit out of the position. That way you'll be able to really make some nice profit. Then on 23rd, Thursday, they are expected to make the slide during the Japanese session. Then considerable rise during the European and US sessions. And on Friday, swing and rise during the Japanese session, and the sideways move just induce the long holders to liquidate the long position, and then they continue to gain the level during the US session. And those who have gone short, thinking that the market is range bound, will go in for short covering. Then they will understand the market has breached all the resistance and gone above, so it is no more range bound. Then market has become bullish. That's what they say. And later on, you find that the last week of March and that week and the first week of April will be used for the monthly trend reversal. So during the monthly trend reversal move, the players will make very volatile moves in the market. So they will make a quick extended downward stop and before making a big rise. Then the traders will get really confused, and some will say that it is a wide range bound market. Some will say that it is trending down only, and then very few will understand it is an uptrend in the market, and then the players' intentions will be revealed in the month of April also, as they want to rise the market. So the levels in which the currencies are expected to swing in this week, Euro could swing from the 1.07 to 1.11 area, and GBP from the 1.2375 to 1.2775 area. And the current highs and lows and the highs are indicated below. And USD could be trading in the range of 112.50 to 116.25. Then CHF could trade around 98.25 to 1.0050 area. Canadian dollar from 1.31 to 1.3375. In Australian dollar from 0.7675 to 0.7925 area. So these are all the range in which the currencies are expected to swing in the market. So watch for such quick dips to buy and wait for the quick rise to book profit in the market. We'll come to that other market reading now. I noted down the initial lows and the highs in all the four majors and two commodity pairs. Euro formed the low 1.0734 and high is 1.0763. They did not breach the low, but they breached the high and then holding around that by only 2 pips, but still holding around. In the case of GBP, 1.2382 is the low. They just breached it by 1 pip, and 1.2395 as the initial high. They breached the high by 1 pip. So they made a brief downward stop and for 1 pip or a false move, and then started gaining the level, and then breached the high also by 1 pip and holding. So they are increasing the spread between the low and the high because it's hardly about 15 pips. So after increasing the spread between high and low, and also to handle Euro GBP at the lower level, they will again start gaining Euro first and followed by that of GBP. As a result, Euro GBP cross will go up. Then in the case of Yen, 112.48 is the low, 112.75 is the high. They are not breached the low or the high. I just made a mistake. $112.75 is the high. Then in the case of CHF, 0.9959 is the low, 0.9986 is the high. They not breached the low or the high. In Canadian dollar, 1.3321 is the low. They just breached the low, 3316. They have gone to 1.3353 is the high. They are not reached near the high. So here it indicates that they have breached the low and staying below. As you know that the commodity pairs lead the rally and lag behind. So they just started acting on that of the commodity pairs to start with. So see, Canadian dollar has breached the initial low and staying below that. If it stays for 30 minutes, then it will continue to make a downward move. Then Australian dollar 76.93 is the low, 76.25 is the high. They just breached the high and went up to 77.27 and holding around 77.26, just holding above that of the initial high. So both in the case of Canadian dollar and Australian dollar, they started making the USD weakening move. So once you come across the spread between the high and the low becomes more than 40 pips, you can think of taking position in those currencies and follow the main forecast and do the market trading, and then understand what the players are trying to do in the market. And whenever you come across quick moves, understand they are all false move. Intentional move will be the slow move. Whenever they make slowly gaining move pip by pip or losing move by pip, then you try to take the positions accordingly. In a gaining move, try to take a buy and wait calmly for the rise to happen. And by late that particular session, you can book profit. Whenever they are making a slide and they breach the low and stay below for more than 30 minutes, then try to take a sell and keep the hedge out to limit the risk. Then when they make further downward slide slowly pip by pip and calmly keep stop at entry and remove the hedge order and wait for them to slowly come down for 2 sessions and the start of the 3rd session. Because we know that whenever they make such moves, it is intentional move. So 2 sessions they will make a similar move, and the 3rd session they will reverse. So before the reverse, you can book profit. Similarly, in the case of Australian dollar, they just breached the initial high and staying above. If they are not coming below that for 2 hours, then you can take a buy and then straight they will gain the levels. Forgot any question or you want to have any clarification, then ask me in the question answer window. I am willing to answer those questions. Now I recommend the trade calls. So near that of the low, one can take the buy with a hedge order, and probably you may not be able to get that immediately the low to be set. So wait for the late session, and during that of the gap time and the session start time, whenever they are making a small dip, then try to take the buy in the middle level. Then they will start gaining it during that of the European session, book profit during the late European or the early US session. Afterwards, they are expected to make the slide in the market. Here is a question Bren has asked. I wanted to know if there are 2 or 3 pairs active during the gap time. When is it a good time to enter for the stop and in the early session? I get confused sometimes. So whenever you find the red, green things appear very quickly during that of the gap time, you can easily recognize that they are the pairs, they are active during that of the gap time or any time of the day. So you will find now it is red, see green. So red, green. Sometimes you will find green. Sometimes we'll find red and red, green, then green, red like that. So when there is a consecutive green, that means they are buying, and consecutive red means they are selling. That's why it becomes red. That means what? The See, the current level is shown. The sell has happened below that. So once the lower level order is exposed, that means at the same level the selling has happened. That is why the lower level is being exposed. Then it will become red. And if the higher level bid is purchased, then it will show green. So now higher level buy. So you find that red followed by green. That means they are simply consolidating at the same level. So whenever you come across green, that means they are buying pip by pip. So you'll be able to understand, once they start buying quickly, then they are likely to gain the levels very fast. When they show red, that means they are going to make one dump. At the time, try to take the position. Gap time, but you have to close the position within 30 minutes of the session. Afterwards, they will make another trend that we should be able to follow carefully. My simple advice or a basic advice will be, follow the trend and the long-term trend and take the positions, so that what happens, no, you are not on the wrong side of the market. So when we know that the major focus says that the market is an uptrend, then dips are buy opportunities. Try to buy near that of the low, rather than just doing a trade of buying anywhere. Wait for the market to come closer to the low from the start of the day, and that is not been breached for more than 30 minutes. Try to take a buy. You'll be able to see a definite swing trade profit. Instead, if you try for a small swing trade of sell and quickly book profit after 10-20 pips drop, sometimes what happens, they may make sideways move and they may make the down in one or two more pairs. Then the pair in which you have taken the sell, if they are not dropped, you should have the quick-wittedness to close it with a nominal loss or stop at entry. If you fail to do that, that will be the first pair they will gain fast. So also look into that of the net change. When it is in green net change, don't try to take sell positions. That means what? If it is red, then probably, or red net change, then probably they are likely to make a somewhat downward move. At that time, we'll be able to book profit. When the net change is green, you try to simply take a sell position. They're not going to let loose the market. Then you will be forced to cover it at entry point or wherever you are taken as sell. And another question: are these the only pairs that move during the stop end, or can other pairs move too? So it all depends. See, the players make small swing to start with to induce the traders to commit positions. So the traders think that, okay, there is a data release with regard to Japanese yen and no data release with regard to euro. Okay, there is a data release with regard to GBP. Then many of the traders presume that we will do the small scalping or swing trade in the case of euro. Because there is no prime data release, it will follow technical. That is what they assume. Then what happens when all the traders have taken a long position? The players have to necessarily do a brief stop end on the downside before making a rise. So whenever a quick move happens, at that time if you take position, then you will be able to see immediately your position is making profit. So that is how you have to recognize the pair which is making more than 40 pips spread between high and low. See, now if you see here, Euro has not made more than 40 pips. Yen has not made more than 40 pips. GBP is also not made more than 40 pips. And CHF also. Still, USD CAD has to make few more pips down in order to make 40 pips spread. And here again, it is not made 40 pips. So when none of the pairs have made 40 pips spread between high and low, that means you find that they are going to make only small swings. If you take position, your patience will be tested. These are all the market timings. So now you know that daylight saving system has been incorporated into that of the US. From 26th onwards, in Europe, daylight saving system will be followed. Then from 27th, the next Monday onwards, you will find the Japanese session will lose about 30 minutes and European session will start by 7:30 GMT. Okay, thank you. If there is any other question, kindly ask me. Coming Friday, I got some work, so I'll not be able to give the review part of the webinar, but I'll come back on 27th March and give you the forecast for the next week. So if you've got any doubt, kindly ask me. I'm willing to answer the questions. I will show meanwhile the forecast slide for the benefit of the latecomers. So session-wise forecast is given, and look into that other forecast and find, okay, on Thursday, they are going to have a slide during that of the Japanese session, late Japanese session, and also gap time and the start of the European session. We watch and see which pair is bottoming it out. At that time, for that day, at that time, you try to take the buy position, wait for the rise to happen for 2 sessions. That will be intentional rise. So you'll be able to really book profit. Look, identify when you can enter first of all trades. So, like today, you can take a sell during the quick rise during early US session and then book some profit during the slide. Otherwise, if you find it is risky, then wait for the slide to happen and then try to take a position and close during the early Japanese session. If it is not a convenient time for you, then wait for the tomorrow European session and wait for the slide and then try to take the position and close during the rise during the US session. Then Wednesday, during the early part of the slide, you buy and book profit. And afterwards, the market is expected to make sideways move, avoid taking position. Thursday, you can take a buy during the Japanese session. And Friday, you can take a buy during the European session so that when they make further rise, you will be able to easily book profit. Keep in mind that the players are making upward shift in trading zone. So during that, they will first gain slowly the levels and make one extended downward stop and then make further rise. So you have to be very careful. And especially next week, such extended downward stop could be done in 1 or 2 pairs. Normally they do it in the case of GBP and USD. So Thursday looks like the biggest day for the gaining. Yes, it will be an upward, clear-cut upward intentional move. you'll be able to get about 150 pips profit during this time. Any other doubt? Then following week, the market will be making volatile moves for that of the monthly trend reversal. So when you are doing position trade in this week, avoid doing it next week. So this is how you should be able to demarcate it in the market. And if you continue to look into the chart and continue to take positions simply following any method, pivot point or supports and resistance, etc., during trend reversal it doesn't work, then you find whatever you earned, you lose it by month end. And if you ask many of the traders who have lost money in the market, they will say, yes, during the month end and the month beginning time, I lost the money. Because the players make extended stop ins and also quick volatile moves. So if they are on the wrong side, especially when the going is good, the trader tend to commit bigger loss out of greed so that they'll be able to earn big. But later on they'll find that happens to be a detrimental trade for them. Is there any other question? So this is the range in which the currencies are expected to swing. The initial lows and the highs, they have breached the low in the case of Canadian dollar, high in the case of Australian dollar. So indicating that commodity pairs, they are trying to lead the market now. The players do the sequential move. First of all, the commodity crosses and the commodity pairs. Then later on, yen and yen crosses. Then the majors, and finally, European crosses. That is how they make the moves. So accordingly, they started with that of the commodity pairs. So these are all the recommended trades. You can try it in a demo trading platform. The market timings. So now daylight saving system is on in US. So the timings are different from the previous one what we have been following. And from March 26th onwards, you'll find the European session timings will also be shifted. So I'll come back on 27th and give you the forecast for the next week during my Asian session live market analysis webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I hope you people are in a position to make use of the forecast what I am giving it, and also the market reading technique, so that you yourself are in a position to identify which way the players are making the moves in the market without any ambiguity. As a result, you find slowly the market fear will go away. Once the market fear goes, you become a very successful trader. Wish you all the best in your trades. See you on next Monday.